Welcome to the Dream Life Architect Podcast. Today, we have a really interesting topic that I think is a subject that most people don't know anything or very little about. So I'm really excited to introduce our guest and get into this topic. And I think you'll find it, one, very educational, but also very fun conversation that I'm going to have with our guest. And our guest today is John Mendelsohn, who's Asher Group's CEO. And let me tell you a little bit about Asher Group and John. So John's got over 2 decades of experience in the life settlement and life insurance valuation industry. And how he got started, he saw a gap in the marketplace and really saw a need for family values and client-focused life settlement company. We'll talk a little bit more about what that means. And interesting, the name of his company, Asher, actually stands for Do It Right and You Will Be Blessed. And I thought that was kind of interesting for a company, what they stand for. And so today's discussion is going to focus on life insurance as an asset class and how it can be valued and sold like other property. And one of the things that you probably see on TV is these advertising, for different companies. There's like gold mines and things like that. I'm going to talk to John about those because, everybody may be aware of them, but there's a big difference between these platforms. And the life settlement solution is really good to be aware of because it can really help solve problems that people might have or enhance retirement income, investments, long-term care, charitable goals, things like that, which obviously is good to be aware of. And here's a really kind of a fun fact about John. John used to be a second grade teacher in Orlando before becoming an entrepreneur and growing the Asher Group nationally. And one of the great things is the guests we bring on are amazing people, and John and his sister were gracious enough to be speakers and sponsors at our Elite Wealth Advisor Symposium that we put on every year. And so it's great to have them, not only on the podcast, but also share what they know and what they do with other advisors across the country. So John, really excited for our discussion today. So maybe, tell a little story about yourself, where it started and how you got to, this particular industry.
Sure. Brian, first of all, it's great to have to be the opportunity to contribute here. I know you have a wonderful group of clients and advisors that have probably never heard of this whole concept of a life settlement. The ability to receive a buyout of their life insurance policy for more than the cash surrender value, but less than the death benefit. So in other words, someone pays into a life insurance policy for all these years. It could just be, to take care of the kids, could be for any estate tax or wealth transfer reasons. Maybe they had a business and they transition out of that original need. And instead of just canceling it for X amount of dollars, maybe it's worth X times 2, 3, 5, or 10 times that amount. You would never walk away from any asset without first knowing what it's worth. So what we do is we're independent, we're valuation experts, and we know how to value life insurance without forcing the client to go through a medical exam, draw blood, like, issuing a life insurance policy. So we would review some information, just gather it, and we would come back to you as the advisor and the client and say, we think that this policy that you could cancel for $50,000 is actually worth $450,000. And what happens in that transaction is that we've built an auction platform where we serve as a fiduciary to the client, so the policy owner. That could be the trust, the business, the charity, the individual, whomever it is. And we understand what that policy should be worth. But just like they say, that's why they play the games on Sundays. You can forecast all you need, but you got to put it on the market, no different than if you were going to sell your house. You can have comps, but once you put it on the market, or realtor.com or any of those type of things, you see what the actual bids are. So we facilitate that transaction. We force competition by some of the world's largest private equity pension plans, all these direct-to-consumer buyers that you reference, you might see on TV, that are in essence are trying to avoid the auction. They're just trying to scoop up that asset, which happens to be a life insurance policy. No different than somebody would scoop up a piece of real estate without first having it listed somewhere, competitive bidding. Our job is to increase the value to the client. So as the advisor, you can work with the client to decide, does it make sense to sell the policy? Should they keep the policy? Should they restructure it? Whatever that best option is for the client, we're here to help provide that fair market value data point. And once again, the client does not have to get examined. We simply gather information and they can see, does a buyout even make sense for the client?
Yeah. What I have found is, in just talking to clients in general, most of them aren't even aware that your industry exists. And so if they, get to a point where they feel like they don't need the insurance anymore, it's typically, surrender it, get the cash value, or it might be a term policy. And, obviously term insurance has no value whatsoever. And I think if I'm correct, John, can't you even do a life settlement for a term policy? I know there's probably, and maybe you want to get into this, like here's requirements on size of policies and things like that. But, even scenarios where you have a policy that's worth zero, it could literally be worth tens of thousands of dollars, correct?
Yeah, absolutely. I mean, you would never, once you kind of transition out of the need for your first starter house, you would never just kind of close the door and walk away and say, all right, I'm done with that. Let me look at the next one. Well, any type of policy can qualify. So before canceling it or surrendering it, all policies can be valued, including term policies. And once again, no one ever has to be examined. So we can look at policies that start around 100,000 and unlimited, where we're working with family office clients right now that have over 100 million of coverage on the matriarch and patriarch. So any type of policy can qualify. It really just comes down to looking at all your options before you ever cancel a policy. So we're going to help you make that decision by giving you that data point.
Yeah, and I just wanted to emphasize one point. You kind of talked about competition, and I alluded to earlier on TV, there's these advertising from, specifically a couple of companies that do this work. But I think the big thing for people to understand, there's a really big difference. Not that these companies are bad, but there's a really big difference in what they do and what you do. Same industry, but the difference is they have their own company. They give you a bid, and literally, they can come up with any number. Whereas what you do is you send it out to the marketplace and compare it to, I don't know how many you go through, but lots and lots of company, and make them compete against one another, and it can have a substantial positive effect on the amount of money a client gets. But if you're not aware that there's, this difference, you may get involved in something where, you're not getting full value.
Yeah, we recently were working with a client. As Brian said, the buyers in our marketplace, they're not malicious. They're just buyers. They're no different than any of us are on the call. If we saw a piece of real estate, we hope we're the only one making an offer on that real estate.
Yeah.
And why do we feel that way? Because we know that if someone else gets involved, there could be bids and counter bids and increases until it might go up to a point when they might outbid you and you don't get to purchase that asset. Well, our market is no different, and it's not uncommon. We have one right now. It's I think a $3 million policy, if I'm not mistaken. Someone had responded to one of those advertisements on TV, and they had an offer for about 300,000, which was about $250,000 more than they were just going to cancel it for. So they thought that was a great deal. It's a great value. Well, before they did that, they talked to their advisor. We'll call him Brian for the sake of easiness here. And they said, hey, Brian, we were going through this process, and it dawned on us, maybe we should be talking to you about this as our advisor. What do you think? And in that case, the advisor said, geez, I'm not sure if that's a good deal or a bad deal. And they checked with their broker dealer, with some of their other relationships, and we happen to be the company that's approved through them through a due diligence process. They said they sent it to us. Is this a good offer or is it not a good offer? I'm just not sure. It's not the market I focus on. I've done wealth management, insurance, and financial planning for 35 years, but not really in the life settlement business. We looked at it and we said, unless we're missing something, we feel this policy should be worth around $900,000 to $950,000. based on the fact pattern. And that's what it ended up being like. The policy ended up having about 20 plus offers, and it closed north in the high 900s. So that client could have left $600,000 on the table that could have been used for charitable planning, retirement planning, maybe purchase other types of products. Maybe it's new coverage for their adult kids. I think they used some of the proceeds to fund a special needs trust for a grandchild. So instead of liquidating any other assets, doing anything, this life insurance policy, which appeared to be just something that they kind of dealt with for all these years, ended up being the funding mechanism for all different types of planning without liquidating any other assets or equities. It was really just a phenomenal solution. And the family said to themselves, I cannot imagine if I would have left 600,000 more on the table. So Brian, huge difference between those that market on TV and those that are fiduciaries, such as we are, that work with advisors and the team just to make sure the client is getting what they deserve.
Yeah, and I think it's just, part of the Dream Architect Life podcast is, getting you informed on different things and how people are living their dreams. But, indirectly, John, one of the things is if you can help somebody turn an asset, say they just thought they had the cash value, and 4, 5, 10x what they get. Just think of all the other things that they could do either for themselves in retirement, or like you said, they could fund some, charitable trusts or do some things for grandkids and, make more of their dreams come true in a scenario that they didn't even know existed. And so that's where I thought this was so important, is to make sure if somebody has a life insurance policy and they don't think they need it, make sure you talk to your advisor and make sure your advisor is dealing with somebody like John that's independent. Obviously, just go to the Asher Group and you don't have to go to anybody place else. But and get these other bids, because it will be well worth your time. And I think maybe just talk a little bit about maybe the taxation when they get these big checks. And then part of it does take some time to, go through this process. So I think maybe talking a little bit about the tax consequences and like, what would you expect if you went through this process, and how long does it take?
Sure. So just to start with the process itself, it takes about 90 days plus or minus. There's times we've done it in half the time frame, and times it's taken longer because they had to find documentation. Maybe it was a copy of a trust, or maybe it was a corporate-owned policy, and the 50-year-olds were buying out the 80-year-olds, and they did not have all the operating agreements up to date, so they had to locate those. The process itself, can really match the speed of those that we're working with, or if the attorney or CPA wants to help assist along. I mean, we aren't tax advisors, although we have trained, probably 6 to 7 times at the AICPA's National Tax Planning Conference. And we've spoken specifically on this subject matter, so I can talk to it. And we even have a couple articles from Trust and Estates magazine that we can give to Brian to get out to the listeners if they need that. The tax rulings are very favorable for someone that sells a policy. There's zero tax up to the cost basis, so how much they've essentially paid into the policy. From the basis to the surrender value, that's treated as ordinary income. That rarely happens in this business, in this transaction, because if there's a lot of cash value, they might consider riding the policy out a little bit longer. So that rarely happens. So once again, zero tax up to the basis. From the basis to the surrender value, ordinary income, and everything above that, long-term capital gain. I would tell you, after working on a couple thousand of these every year for the last, 2+ decades, 99% of the time it's tax-free or long-term capital gain. It's very rare that we will see policies that have high cash value. Whole life is the least purchased policy in our marketplace because there's a lot more cash value and a lot less net death benefit. Sometimes in those situations, that's where we look at, maybe a valuation for donating the policy to a charity or some other concept if they're looking to exit that policy. And sometimes we have advisors and clients tell us that the windfall that they receive from selling the policy is fantastic, but their main strategy was to free up those ongoing premium obligations. If they were spending 10, 25, 50, 6 figures a year for that. It was really just to free that up, and receiving more than the cash value, the surrender value was, just a bonus on that by itself. And I can tell you, Brian, it was kind of connecting the dots backwards to some of the beginning part where you said to me, I went from school teacher to, being an entrepreneur. I dealt with so many types of families, I had a bachelor's in economics from University of Florida, another bachelor's in advertising. So I was double majored. And I said, you know what, I'm going to make money later in life. And I got my master's in education. I did happen to meet my wife while we were waiting tables, as we're both kind of putting ourselves through school. So that was helpful along the way. I have an amazing wife and 2 beautiful daughters. And I always joke around, as I became a school teacher, that who wouldn't, want to marry me? What woman would not be lining up for me? I was a 2nd grade school teacher living with my parents at the time. So, that's just an in-demand type of guy. Well, what I can tell you is all my years of teaching that led me into meeting families that were financially secure and those that were not financially secure, those that had parent or grandparent issues and they were just running out of money before month, those people that were in the sandwich generation and they're finding themselves paying for their kids and their parents or maybe even their grandparents. So although when you think about a life settlement, that a life settlement is really meant for people in their 70s to 90s, if they're younger and they do have the financial responsibilities for caring for a loved one, a parent, a grandparent, in-laws, you might want to ask them, do you by chance own any life insurance? Maybe there's a way we can appraise and monetize those policies to fund your caregiving needs. Maybe it's to fund other planning needs. And then that frees up their own time and liquidity to roll up their sleeves and do the planning with a financial advisor in their 40s to 60s. This sandwich generation is really going to be the one feeling this, with 1/3 of the population moving into this demographic in the United States. You're talking about the boomers are now turning 79 right now in 2025. Think about what that means. They're living longer. They might have a longer lifespan, but their health span isn't what they'd like it to be. And when your health span's not what you want it to be, you're now forced to rely on long-term care that they may not have. You're forced to rely on adult children or grandchildren. So what I'm hopeful for, my sister Jamie, my brother Jason, I always think about this almost like a public service announcement, that there might be ways they might, have this kind of hidden Rembrandt in the attic. They have no idea is worth significant value that they can use to reposition and fund caregiving needs, fund business planning needs. I mean, we did that in COVID. We helped businesses stay in line when they sold their buy, sell, or key person insurance, including term. Well, we helped people retain home care services for their parents and their grandparents by selling their policy during COVID, so they didn't have to go into these communities. We helped nonprofits stay afloat because their donor base kind of dried up and things like that, by helping them take donated policies and appraise and monetize those to keep that nonprofit, that university, that hospital going. So there's so many ways that you can reposition existing life insurance. It's not just the policy that the policies are bad and badly structured. They might have just outlived the need. And what are you going to do with the policy? You wouldn't walk away from any other asset without first having it valued. Life insurance is no different. That's kind of how we always want you to think about it.
Hey, Brittany here. In case you hadn't heard, our latest book, Dream Architecture, is available for the taking. Think about it like this. What is your biggest, wildest dream of what retirement could look like? Not the dream that your friends have, or your parents maybe had, or your coworkers. Your best dream, the unreasonable one, the one that you might have trouble admitting even to yourself. So that is what the Dream Architecture book is about. Hop on over to dreamarchitecturebook.com so you can start dreaming big today.
Yeah, I love that an analogy. And I think, by having you on, if nothing else, maybe it's not applicable to the listener, but maybe you weren't aware of this, but maybe you have parents or somebody that's in a financial situation where it's not ideal, and you could be extremely helpful just maybe by bringing up the subject. Do you have an old life insurance policy that, and were you aware that, these are some things that could be done with it, and, research it, because it might make all the difference in somebody's, final years, or how the comfort level, or just, you mentioned so many different ways that it can be helpful. And I love, part of the reason I wanted to have you on is just the creativity that your company has and how you design these and the other purposes. I think is a really a compliment to you and your family, and how you've built this. Is there a particular type of life insurance policy that tends to work better? You'd kind of mentioned whole life maybe wasn't, the best one, but is there something out there that, gee, that seems like that brings the highest value that would be helpful to the audience?
Yeah, absolutely. If you see the words universal life on your life insurance policy, those are the most purchased policies in the life settlement market. I'd venture to say as high as 90+%, 85
Wow.
to 90, 85 to 90% are universal life contracts. There's different flavors, kind of different policies. There's guaranteed universal life and index universal. I'm not going to go into any of that. Okay. You don't need to be an insurance expert. That's why you have an advisor, and they can rely on people like Brian and partnerships with groups like us. If you see the words universal life or a term that's convertible to universal life, those are the ideal policies. And believe it or not, the number one reason people sell policies is increased longevity. No one thought mom or dad would be living into their 80s, and it might even be late 80s and 90s. 22% of the policies that we worked on, went through successful transactions, were on people 90+ years old, where no one wanted to bet against mom or dad. They're saying, gosh, we're not depending on these policies, and these premiums are costing us so much more. I'd like to, reallocate my dollars how Brian, my financial advisor, tells me to reallocate them, not into this policy. It's just, we feel like it's a lost leader, and we keep throwing money into it, and I feel guilty. How are you feeling, mom? Hey, dad, how are you doing? When they're not even counting on that. So if you could take that policy, kind of flip it upside down, appraise and monetize it, receive a buyout today that's higher than the surrender value, that takes the pressure off mom and dad. Because, one of the first successful engagements we had years ago that made me just feel, I'm a mushy guy. Anyone that knows our company knows we're a family values person. As Brian said, Asher was one of the 12 tribes from the Old Testament. Do what is right and you will be blessed. Well, there wasn't a lot of that in this industry, 2 decades ago. But that's how we stand for it, what we stand for. So the patriarch of the family said after this completed transaction that she was so grateful for us, wanted to thank us personally, asked the advisor if they could bring us on a call, because she said this is the first time in 10 years she did not feel like she was the reason her children had a financial dysfunctionally relationship. And that because of this policy she and her husband bought years ago, they forgot about, it served as the reason she now is enjoying her kids and holidays. They're actually getting along, where she's felt terrible this whole time because of the financial strain that just fell on one of them primarily, who was a little bit more well-to-do. So I would tell you that I've seen some pretty amazing things. I've seen dysfunctional family relationships where the policy brought the patriarch and the adult son who haven't talked in 20 years together, but the son was the beneficiary, and they said, listen, we're about to make a decision that would involve you and involve your finances specifically. It brought them together, and they talked about this, and it became the reason. So it is certainly not the silver bullet. It is certainly not the right answer every time to sell your policy. However, it is a fantastic reason to have a multi-generational planning discussion, especially on an asset that really requires a lot of ongoing cash flow on an annual basis on average. So I just hope this can make a big difference in the lives of your family. The adult children are draining their retirement funds, which negatively might impact their retirement or their kids or grandkids if they were going to do generational planning themselves. I love when people ask us questions. It's all about the auction. People say, no, John, I think I get it. One more time. how are you different than the people I see on TV? How does my advisor need to be involved? I don't understand. And my answer is this, your advisor has a fiduciary responsibility, which means they have to do what's in your best interest. I have that same fiduciary responsibility. Your advisor has to look at all available products and solutions and then defend why they selected these. That would be in your best interest. We shop the whole market to do that. We don't just go to one buyer. We force competition that increases value. If you don't do that, unfortunately, a buyer could scoop up that policy, and they're doing exactly what their fiduciary responsibility might be to their investor, but not necessarily to you. They're not malicious. They're just doing what they're hired to do, get a good deal for the investor. So we have bid transparency, almost like if you imagine you're at Sotheby's or Christie's, for those of you that know the auction, where you can see all the price points that it went to. So you can feel good understanding that you got the most for your policy.
You brought up an interesting point, John, dealing with longevity. And I never really thought of that till you just said that. But one of the 5 pillars of the Dream Architect life is health and longevity. And after you saying that, what you do, I think, is even going to have more impact, because with medical advances and, AI and all of that, people's life expectancies are just going to keep expanding, which just, creates probably more of a need going forward. So that was interesting. I never really quite thought of that perspective before. So thanks for sharing that.
Yeah, absolutely. I mean, we are all part of the longevity marketplace at this point. When you have a third of the population in this demographic, and the next third, middle third, is affected by what happens in their lives.
Yeah.
And as my parents taught me, there's 2 types of problems in life. There's those that you can solve by writing a check, and those that you cannot, through prudent planning, working with your advisor to look at all of your assets. What does it take to keep them? What's the duration? What's the amount? Do you have what you need, or do you need to start now thinking about options to be able to meet those obligations, so you won't be a financial burden? I mean, there are times we work with financial professionals and they say, my client is not sure which life insurance policy they want to buy. I've showed them 3 of them, policies A, B, and C. And my answer is, well, we'll take a look at it. We do different types of reviews. And I said, unless you're pretty darn positive you're going to be an angel by age 83, this policy A really skyrockets up. And you better have a heck of a lot of premium reserves, because that's going to be about 30% longer if you still have a need for coverage later. Policy B might be a little bit more expensive today. However, very predictable. It's a high credit rating, a very strong asset, an underlying asset as a carrier. I would recommend that one. And that gives you options at the end to keep it, use it, reduce the face, sell it, whatever that is. But it's always smart to look at would you ever sign any contract if you didn't know what the back end exit looked like? Never.
Yeah. And that also makes me think of another thing that I think people fall into is they bought a policy, 20, 30 years ago, and it was based on certain assumptions, and maybe the assumptions in real life turned out to be different. So the, values or how long the policy lasts isn't as good as they anticipated. So the first thing is people don't need to get in-force illustrations from time to time, or make sure that they're looking at that. But one of the options, as you kind of alluded to, is if the policy wasn't going to perform, or all of a sudden you'd have to pay a lot more premium to keep the policy, but you didn't need it, there's where, what you do could be so helpful. So just, making people aware that this is out there, and, to spend time being comfortable and, what do I have? Do I need it? If I don't need it, having somebody, whether it's themselves or their advisor, work with somebody like you to find out what your options, I think is so critical. So John, what I'd love you to do is, if somebody wanted to learn more, or they said, gee, I happen to have some situations where that might work out extremely well. How would somebody touch base, or what's the best way to find out more about whether that's appropriate for their particular situation?
Well, they could simply just give us a call. I mean, our toll-free number is 800-384-8080. So 800-384-8080. Our website, they can fill out in kind of a probability, what is the low, medium, or high probability the policy will have value. That's at our Asher group, ASHARGROUP.com. So Asher has all A's, ASHARGROUP.com, or they can just email us, and they can do it at info at ashergroup.com. And we will make sure to reach out. I'd say the everyday phone call we get is there something there? Here's my fact pattern. I have a client or my policy. This is what I know. And as I said, you do not need to be a life insurance expert. Most people call us, and we're going to know on that first 5-minute conversation if there's even a path forward. I just had someone call me this morning. They go, "Hey, John, tell me if this makes sense. Because I know I've known you for years, but your business is just so specialized. I just don't know." And I said, "Well, tell me about it." This client never thought they'd have to pay a premium again. And their mother, she's now 87. They have a policy sitting in a trust. Is very little cash value. Is she too old? Is she for this? But there's no cash value whatsoever. I said, actually, those are the most attractive policies in our market, because that means a lot more higher net death benefit. And at 87, we have clients all day long. It's, as I said, over 20% of the clients we work with are in their 90s and older. If they're younger, we just worked with someone, and she was 47 years old, but she had, unfortunately been living with a critical illness of breast cancer. And she had 3 treatment centers for young women with addiction issues. And she had an estimated actuarial life expectancy of around 7 to 9 years, right around there. And she was looking to pay for an executive team to come in and keep her treatment centers running for these young women with addiction issues. So she sold 2 out of her 3 policies, brought in the executive team, and she was able to stay home with her daughter while she got treatment. So it's really actuarial driven versus just age. So around a 20-year life expectancy or less, that could be for younger or more advanced stage clients.
Yeah, and I appreciate your saying that, because I think, the thought process is, well, it's applicable for somebody that's older. But no, it's really, if you unfortunately, develop a health condition that shortens your life expectancy, this could be really, really helpful to make sure that, whatever years you have left can be, as positive as possible to provide extra cash for treatments or whatever. So, and earlier, John, you had mentioned there's like a paper or something, if you would like, we'll include that in the show notes if you want to send that to us, so somebody can either go to your website, or, when they're listening to the podcast, they'll have access to it. And then, did I understand correctly that you said on your website that they could go there and put in some parameters and kind of get an idea of maybe what their policy might be worth, or if it would have some value greater than the cash value?
Yeah, correct. What we call it is our probability calculator, because and they can go in, they can add in like their policy size, the death benefit, the cash value, a little bit about the health, and it's just really a high level of low, medium, or high probability that the policy will have value in the life settlement market. There's a lot out there that are simply lead gens, and they're really not as helpful. They're just trying to gather consumers' information to maybe sell it to others. We're not doing that. All we're looking to be able to do is give some guidance. If you go to our website, you'll see in the top right corner, what's my policy worth, or policy value questionnaire. And then they can really just go through that. We can call, respond to them and discuss it, tell them if we think, if there's, maybe they have more than one policy. They're coming to us saying, I don't think this policy is the one I want to keep. I want to sell that. And turns out we talked to you, and this happens probably 50% of the time. One of the policies they haven't shared with us is actually more attractive. Maybe the product type or the values. We look at it and we say, actually, if the goal is to keep as much death benefit with your family, you could sell this one you thought about retaining, use the proceeds to keep and fund this other policy to age 100 or beyond. So we're happy to work with the client and their advisor, whomever that is, or just work with the client to really educate them on what this process looks like.
Sounds great. Well, I really appreciate this. This has been really helpful, and I kind of want to just change the subject a little bit. So obviously the name of the podcast is the Dream Architect Life, and it's all about how to have better retirement and think out of the box and, have a retirement that's you can't wait to wake up to. So let me maybe ask some personal questions about you being an entrepreneur, and over time, I'm sure, you have thoughts and ideas and dreams. And so, what does dreaming big mean to you, John?
It's really kind of, thinking about my vision for some problem and solution, having a trusted group of like-minded people that we can vet it with. So there's really no judgment in that discussion, thinking about, no matter how outrageous or unproven it might be, and how can we take that and bring it into action. So the average person, the advisor that we really want to help represent well, the consumer can have a great experience. And a lot of that even started, I remember back in high school and college, when my parents gave each of the 4 kids in our family, my older brother Jason and my younger twin sisters Jamie and Jill, Rich Dad Poor Dad by Robert Kiyosaki. I don't know if do you remember that book by chance? It's from a long time ago. And it was the whole concept of, there was this village that needed water, and was the process built on carrying buckets of water to the village and getting the strongest people you could to do that, you can get to do that. And or would you think about this from a more enterprise level and build a pipeline from that water source to the village? Well, we built that pipeline in Asher Group and how we serve the life settlement marketplace. We built this enterprise platform that had not existed before, that has a compliance-centric approach. It's fully transparent. It protects all the privacy. So that was unbelievably rewarding in going down that path and taking this dream. When I first got in this business, when I was a 30-year-old kid starting my own company, now I'm in my 50s, right? That was pretty amazing just to think about it from that perspective, and being able to have like-minded people. I mean, we have team members that have been with us, literally, about a third of our team has been with us for 15 to 19 years. So the amount of wisdom, and there's nothing more exciting to me than dreaming with people that they've seen us take a punch, where we think about our clients in a way that we're not the hero of the story. The advisor is the hero of the story, and their client, they are the heroes of the story. So it's really been wonderful to dream and think from that perspective.
That's excellent. One of the things I enjoy about meeting people and doing the podcast is, it seems like most people have had a journey, and life hasn't always been roses, and those the path hasn't always been clear. So maybe share with us a little bit about some of the maybe most difficult lessons that you've had to overcome in either business, life, whichever, that have had maybe the most impact on you today.
I'm kind of this combination between idealistic and very pragmatic. So I kind of have this inner turmoil that's always going out there. And I think my number one challenge, probably throughout my life, is understanding when to let certain relationships go. Okay. It could be a business relationship. It could be a friend that I can't want it more than them. I can't, continue to give my time and energy and as if, it's endless, when they're fighting their own demons. They have their own issues. And if I've learned anything over life, throughout life, it's to have compassion, empathy, and realize they didn't grow up with my loving parents, and the way that my sisters, my brother, and I might address problems or issues or challenges that come across us. But I also am not trained to be their savior. They need to find it within themselves at times. So I'd say that's probably my number one thing that I've struggled with.
Yeah.
And I'm trying to get better about that, but I always feel like I can potentially make a difference. And sometimes it has, many times it just has not. And I've had to learn to move on.
Yeah, no, boy, that's a really good statement. In our book, Dream Architecture, we talk about, your life kind of turns out with like the 5 people you spend the most time with. So you really want to be careful, spending time with people that, emulate what you would love to be in the future. Otherwise, that can backfire. So one of the other things I'd love, maybe, looking forward. What are some of your big dreams or aspirations that you might have, either for Asher Group or maybe even more fun, just personally?
Well, I would tell you that I had a really big epiphany, during COVID, like many people did.
Yeah.
We watched so many things, friends, pass away, close, friends have other just terrible things happen so much. And, as I said, I've kind of always had this inner why do bad things happen to good people moment.
Mm.
And one of the things that I really got into over the past 3 or 4 years that's just made a huge difference in my life that I am excited about is I started reading a lot about Stoicism, a lot about, from the greats, the Marcus Aurelius, the Senecas, Epictetus. We suffer more in imagination than in reality. Seneca is the greatest remedy for anger is delay. Instead of being short fused. Marcus Aurelius, with his quote, this is the one that actually set me on the journey of becoming a student. And way they kind of describe it is you're never really an expert at Stoicism. In fact, I even joke around a lot that in my marriage, there's one of us that reads a million books about Stoicism, watches YouTube videos, listens to audibles and all types of things about Stoicism. And then there's another one of us that's a natural Stoic. That's my wife. She is the rock that the waves crash upon, right? And when I learned about Stoicism, the quote by Marcus Aurelius, the impediment to action advances action, and what stands in the way becomes the way. That described everything. This huge impediment, this obstacle of COVID, which caused so many issues, it forced so many of us to look in the mirror and do a selfie and say, am I headed in the right direction? Is my company headed in the right direction? Am I treating myself, my body, my mind fairly? My company, my longest team member, excuse me. And we improved our business. I improved things I could control in my life, and the things I could not control, which is another part of Stoicism. You focus on what you can. I learned to let it go and acquiesce a little bit more in those areas. But I would tell you one day I'd like to have even my own podcast or my own books about things like about
Yeah.
working with people and how they've overcome some of the things that we all have struggled with, and how did that apply to their career, to their families, just so I can have a little bit more impact. I feel like we do a good job now as a company. I mean, 2 of our company causes. Both my sisters have Crohn's disease and have had 40, 50 plus surgeries. I'm talking like significant level of Crohn's disease. My older brother, Jason, beat stage 4 HPV related throat cancer. So, he advocates for people all over the world. His website is Superman HPV.
Oh.
His wife did not love that name, but it's a lot better than the first name, which I won't share on this podcast. But he mentors people everywhere, and a portion of all of our revenue goes to those 2 causes. So if you ever know anyone living with Crohn's disease or throat cancer, HPV, throat cancer, we have great access to resources for those as well.
Okay, that's good to know. And I love stories like that where somebody takes a bad period of time, COVID or just so many other examples, and did something during that time to make a bad thing a positive thing in the future. Because I think every situation there's a pot of gold at the end of the rainbow, if you will, and it's just that you have to take action and do things to get it there. And so compliments to you for that. And I'm just like, this has been so amazing that I'm kind of shocked our time is almost out. But I always have one more question that I like to ask before we have to end today, John, is like, is there anything I should have asked that I didn't ask you?
Well, I can take it from deep into a little bit of silly because I do have a silly personality. So I think I gave you a lot more than you probably even asked for in that last segment here.
I loved it.
So, you could say, John, what is your favorite go-to item on any menu in any town USA, wherever you are, that if it's there, everything else disappears? How's that?
Love it.
So I would tell you that anyone that knows me knows that if chicken parm is on the menu, Brian, it's being ordered. In fact, at my wedding weekend, my parents put on the rehearsal dinner menu chicken parmesan, because I know it's not the classiest, it's not the most sophisticated, and I can literally, people will be mortified when we're at a nice Italian restaurant and I still ask the question if it's not on the menu. But if I was just to end with a little bit of lightheartedness, that's probably something that not many people know.
I love it. That's a great way to end. And John, I want to thank you. This has been so informative and educational, and also at the same time, just you've given us some good things to think about on how to make our lives all better in the future. So look forward to continuing to work with you. And if anybody has any questions, either reach out to us, or in the show notes we'll have all of John and Asher Group's contact information. So John, thanks a million, and want to thank everybody for listening. We'll see you on the next episode.
Thanks, Brian. Thanks, everybody.